Insurance companies protect us, but who protects the insurance companies? The answer is a concept called reinsurance. Reinsurance is essentially insurance for insurance companies. It is a way for them to manage their risk and stay solvent. Almost every major insurance firm uses reinsurance to ensure they have enough cash to pay claims after a massive disaster. By spreading risk across multiple global firms, reinsurance keeps the entire financial system stable when unexpected events occur. Think of the primary insurer as the face of your policy, while the reinsurer acts as the invisible safety net behind them. This chart shows how a primary firm might keep a portion of the risk, while passing the rest to a reinsurer. Without this shock absorber, one major hurricane or wildfire could wipe out an entire insurance company, leaving customers without coverage. Understanding these back-end mechanics helps you see how global financial stability is maintained. Thanks for watching and stay curious.